The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, it's a bit of an interesting day throughout the market trade. Grains were mixed to higher late in the session, with the livestock trade mixed to slightly lower and a general risk-off tone in the outside markets. We have plenty to dive through here today. Joining us now to discuss, we welcome in our good friend Matt Bennett with agmarket.net. Matt, good to catch up with you again, buddy. How you doing?
I'm doing pretty good. Just trying to get a house project done that won't quit. Oh man, what a nightmare. But hey, you know
Yeah.
what? We got rain over the weekend, Jesse. So everybody around our part of the world's in a little better mood. Seemed like a lot of those rains missed us over the last 3 weeks. Kind of a one extreme to
Mhm.
another, which I haven't experienced a lot in my career. But you know, the cool thing is, as we speak today, sitting in a good moisture situation, and I think we're gonna have good crops in Central Illinois. It may not be anything like last year, but we're gonna have awfully good crops. So everybody's in a little better mood around here.
Well, it's good to hear that folks are in a better mood, and I appreciate you taking a little time out of the house project to talk markets with us here today. I'm sure a good quick break and distraction from that house project. And
Yeah.
overall, you mentioned good rains and maybe helping crops improve a little bit. And generally, it feels like the markets and the grains this week with a rather benign forecast, we'll call it, or bearish forecast. I mean, more rain, cooler temperatures, really just kind of giving us reason to trend this thing lower. But I know coming up on Friday, we got a WASD report. So it's kind of an interesting week setting up here heading into that August report, isn't it, Matt?
Oh, for sure. You know, and really today was an interesting day. Go to bed with some weakness, woke up with even more weakness, and then by the time that I guess the day session got a good start, it seemed like the corn market was trying to claw back. And then next thing you know, corn's up and beans start to work their way back higher. So, you settle 15, 20 cents off the lows. I mean, it's a nice little move. By all means, I don't know that we should look for a big move, but at the same time, it sure is nice to see the bean market, especially be able to get back off its feet or back onto its feet, after what I would say was a fairly good coverage just last weekend. I've got to think that the bean crop grew. Um,
Mm-hmm.
what kind of number we're looking at, I think it's a tough call. I think USDA as of August 1, is probably going to have to maybe drop that yield a little. As far as corn's concerned, I would assume maybe they'll drop that a little once again. I'll tell you, Jesse, I'm starting to get more in the camp that, we're maybe north of 175 instead of south of 175, because it sure looks like in a lot of places this corn crop's going to finish in really good fashion. So if you minimize tip back, you keep your kernel depth, and test weight ends up being good, a lot of times that crop will surprise you. It'll kind of grow whenever it finishes good like that.
Well, with the case of the corn crop, Matt, if we do end up finishing above that 175 mark here, do you think that gives us reason to stay above $5 in new crop corn, or do you think we're going to end up being a little below that if we get above that 175 mark on a national yield, Matt? What do you think?
Yeah, I mean, it's just tough, Jesse, because you're not only looking at domestic stocks growing quite a bit, you're looking at world stocks growing as well. And with the USDA currently forecasting a 2.1 billion export program, the new crop exports are not really coinciding with that. So you've got to think that maybe there's a little bit of air to come out of the sales, as far as what the demand picture looks like. And a lot of times, whenever you get wind come out of the sales of the demand picture, we know price typically could have the same sort of action. So, what would it take to get demand spurred and rocking and rolling again? Well, usually it takes lower prices. And I don't really like talking that way. It's just that's the reality of the situation. So I wouldn't say I'm bearish at this point, but it's just awful tough to get bullish heading into harvest when weather's been good, demand still stinks. Yeah, ethanol's been good. Corn usage for ethanol's been a nice little bright spot over the last month and a half, for sure. But it takes more than that, and so. I think at this stage of the game, a producer has to be very cognizant. Hey, what's my crop insurance program for me? How does it protect me? If you got 85% at APH, Jesse, you're protected at 502. But if you have 80 or 75, you've still got a fair amount of, I guess, risk, if you will, that if the market moves lower, you're not protected. And so it's a complicated year, but it's one in which you have to know your situation, your own needs, and what you need to do to be able to protect yourself, because there could still be more downside. I think you could easily make the case for more downside.
Well, and one other thought that comes into my mind too, protecting that downside, especially heading into what is typically a volatile report with the August report. There's a lot of tools in the toolbox, Matt. Even if someone is wanting to get through the report, I mean, short dated options. I know you and I have talked about that before.
Yeah.
I mean, there's a lot of tools in the toolbox to try and protect that downside risk here and get at least through the report and be able to reassess then, Matt.
For sure. And so, if you really want to just protect yourself, short date options are a phenomenal tool. Just, September short date is going to keep you protected until August 25th. And I know you sit here and say, well, geez, that's only, a couple weeks away. Two pretty important weeks away, considering you're going to get the August report, first of all. Second of all, the Pro Farmer Crop Tour is going to get nestled in right before those options come off the board. So, if you want protection, let's say Pro Farmer comes out this year and says, actually, I think this crop isn't so bad after all. And I guess my opinion, Jesse, is that well-timed rain with hybrids these days can certainly create some awfully good corn yields. These hybrids are capable of doing more than what any of us ever dreamed. I think they'd be able to do 15 years ago. They just keep getting better. And so, to me, a dry year with a couple of well-timed rain events, I'll take that any day of the week over a wet year all the way through, with nitrogen loss and things like that sometimes we have to deal with whenever we stay wet all year. So I think some of these hybrids could surprise people here in 23. I'm not saying we're going to have a trend line yield. I'm just saying I think that given the stressful conditions we had, I think we might perform just a little bit better than maybe what some folks are giving us credit for.
Matt, same question, same line of questioning on the soybean side for new crop beans. Tighter ballot sheets there. And then obviously with all the various crop tours and more coming up, this picture, it could be interesting to see what this picture looks like here later on in the month of August. But, new crop beans, $13 level. I mean, it feels to me like the fundamentals are a bit better there to help keep us supported at or above that price level, Matt.
Yeah, for sure. And so you've got to think with beans, the way you got to look at it, in my opinion, you've got domestic and you've got world. Okay, so domestically, we're tight. No question about it. Now, if we end up with a 52, 53 bushel national yield, I still don't think you see carry grow over maybe 3 to 400 million bushels. So you're still pretty darn tight with stocks to use well under 10%. Whereas on the worldwide side, Jesse, you've got essentially a 20% increase in stocks is what the forecast is from the USDA. Of course, that's forecasting a pretty good sized Brazilian crop, and that Argentina is not going to have another major crop failure. So there's no doubt from a producer's mindset, you got to understand, that the world is producing a lot of beans. There's been great bean demand over the last several years. We still have really, really good bean demand. But at the same time, you've got two totally different situations between domestic and world. So what I keep telling my producers is ask yourself, if you're a world originator, are you going to chase $14 beans around whenever you're looking at 123 million metric tons of beans, which would set a record, and so Um, yeah, that's the dilemma you've got, and the nice dilemma that you've got, Jesse, is that you're over $13 November beans. I mean, we can sit here all day and say, oh, it's going to be tough to rally substantially, but if we're already at 13, we got to understand what kind of money can we make at $13 beans, because I think we can do pretty good.
I think we could do pretty good as well. And I know November beans fell below the 100-day moving average Tuesday, but then the market able to rally some short covering, just didn't find many sell stops below that level here ahead of Friday's reports. We're talking today with Matt Bennett from agmarket.net. Matt, let's talk the wheat market here as well, real quick. It seems like declining yield prospects for spring wheat in the northern plains and the southern Canadian prairies has been helping to try and keep us supported, at least in Minneapolis and to some degree in Kansas City wheat as well here over the last few sessions, Matt.
Yeah, I believe so. And I think, there's still that underlying fear that you're going to see something crazy happen in the Black Sea region. I think when Russia was kind of taking out ports and bombing Ukraine, everyone maybe got used to it. I hate to put it that way, but it's almost like you would get a rally and then everyone would kind of sell it. I think it's a different feel, though, if Ukraine goes after some of Russia's ports. If they disrupt the flow of the world's largest wheat supply, you've got to think that that could have a pretty big impact on the market. So I do think there's a very cautious bear out there. There's still a lot of folks that are bearish wheat. Don't fool yourself, but a little bit cautious because they don't want to come in here and go to bed some night and be looking at a really nice, healthy trading account, and then get up in the morning and be on $100,000 margin call, because the wheat market will do that to you pretty quick, especially with a 50-cent move. And we've seen lots of 50-cent moves over this Ukraine-Russian Black Sea region deal. So the wheat market is definitely a tough one to trade. It's a tough one to figure out, but you're right. I do think that you've got some support as well from what I would call, maybe not the best prospect as far as that wheat crop is concerned that we're going to be seeing here this fall.
I know on the outside markets, we're watching more economic inflation data. The dollar rallied some 50 basis points on Tuesday. Moody's downgrade of some of those small and mid-sized banks overnight, that really put a lot of caution, just a general kind of risk-off tone in the outside markets on Tuesday. And I think just news like that, Matt, is more of a reminder that inflation, recession, economic woes are still here and can still be impactful throughout the broader market trade, Matt.
Yeah, I mean, we can't ignore them by any means. As you and I are talking, the Dow down sharply, Nasdaq's down sharply. I say sharply, 200 to 300 points, but regardless, that's on the Dow. Nasdaq pushing 200, but the dollar's up. And the dollar's up. It's, I guess, one thing that I find interesting and really good for our commodity markets anyway, is that with the dollar up, you've got crude oil up a buck. And so it's really nice to see. It doesn't necessarily make sense all the time. I mean, most of the times, if the dollar is up strong, crude oil is down. I mean, that's just a relationship that we've come to know. But this has been a really strange market, over the last several months. So, I think you're certainly going to have pressure on commodities most of the time whenever the dollar's sharply higher. But at the same time, I think a lot of folks are trying to figure out, they want to continue to invest in the dollar. It's really the safest commodity at this point. It sure seems to most of your investors. And so I think that's part of the reason why the dollar is able to claw back up over 100, and stay there. But again, don't forget that if the dollar stays strong, it's going to be pretty hard for us to expect to be relevant in that world market, because, we've tried to get back into it here lately, and we're still kind of struggling to be competitive.
Over in the livestock trade, cattle and hogs, overall, we get effects from the outside markets there. But, I look at cattle, been a little choppy. Cash trade has been interesting the last few weeks. And then you throw in with that WASDE report coming up on Friday, looking to see, what does corn do? What do feed prices do? What do the feed and residual numbers look like? I think a lot of those factors going to be tied into this cattle market, but overall, just feels kind of choppy lately. Matt, are we kind of topping out here? What do you think?
Yeah, I mean, in my opinion, I think you kind of run out of enthusiasm to buy these cattle, especially when you're looking at the fats. Cattle on feed have been ample to robust. Why is that? Well, of course, A lot of these folks, ranchers, are saying, instead of retaining these heifers when my pastures aren't quite 100% healed up, maybe I'll turn them into 1,500 to $2,000. I mean, I'll tell you, Jesse, the cattle folks have gotten right over this move, and I'm sure glad to see it. I'm thankful for them being able to, kind of get their balance sheets in really good position. I think that's going to give them the confidence over the next few months to come in here, especially this next spring's crop, of heifers. I do think a lot of the plans will be, hey, we're going to keep a hold of these cows. So instead of putting them back in the feedlot, think that's when you could get that next leg higher, maybe kind of a blow off top type situation. I do still see $200 fats as a definite possibility. I'm not going to say likelihood because you just never know with the cattle market. But you can't ignore the fact that today, as you saw the equities really getting beat up, that cattle were just struggling to rally, even whenever corn was getting beat up. Equities are tied very heavily to cattle. It's just something that most of the traders are going to understand. And if the consumer gets a little bit shaky, typically beef is one of those things at some point that they're going to maybe back off of some. Demand's been fantastic to this point, but at some point you've got to think that, if you start getting an investor a little bit worried that, maybe you will see that back off. But again, Jesse, I do see really, really strong cattle markets moving forward. Fundamentally, it's pretty hard to argue against it. I just think that to get that next leg higher, you're going to have to see a lot lower cattle on feed numbers.
Hogs, too, real quick, have been interesting as of late as well. Found some decent support, but I look at August hogs going to be expiring here soon, pretty close to the cash index, but October at a pretty sizable discount. Any thoughts to that and this hog trade overall, Matt?
Yeah, I mean, yeah, you saw this front month raise to $100, and I'll tell you what, it was quite the move. But obviously you do have a large discount here. Are we going to be able to see front month hogs take off again? You're going to have real strong demand to see that happen. And if you take the shine off the cattle market, so to speak, and you're not making new highs consistently, I don't know quite the buying support. I do think a lot of that really strength and optimism, enthusiasm, if you will, spilled over from cattle and was able to kind of drive hog prices quite a bit higher than most of us thought they'd go. But bottom line, you got to have strong demand to keep this hog market going.
Matt, great thoughts as always. I know folks can reach out to you or the team there at agmarket.net to sign up for newsletters and intel and see all your work that you guys do and connect with you guys. A lot of great stuff you guys have available, don't you, Matt?
Oh, absolutely. Website will get you where you want to go. You can get a hold of any of us and kind of see what we have to offer there.
Again, agmarket.net. With that, Matt Bennett, appreciate the time as always, sir. Thanks for joining us, and we'll talk to you again soon.
Absolutely, buddy. Have a good one.
That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.